So imagine this. It's Friday, March 27th, 2026. You glance at the markets and you just see a sea of red. Wall Street is officially in panic mode. Today, we're going to break down exactly how a conflict happening on the other side of the world can create a ripple effect that ends up hitting you right in your wallet.
And this is the number that just sends a chill down every investor's spine. A nearly 800-point freefall for the Dow Jones. Now, that's not just a little dip, right? That's a huge, flashing signal of panic. But what on earth could trigger a drop this steep?
And look, this wasn't just some one-off bad day. This was the cap on a fifth straight week of losses. So, to really get what's driving all this fear, we've got to look way beyond the trading floor. The real story here starts with a conflict that is shaking the entire global economy.
All right, so let's start with the most immediate symptom, the thing everybody saw, a widespread and honestly a pretty brutal market sell-off.
And it wasn't just one little corner of the market feeling the pain. Oh no. This was a clean sweep. The Dow, the S&P 500, and the tech-heavy Nasdaq were all down, continuing this really painful, months-long slide that has investors everywhere on edge.
Okay, so let's trace all this anxiety back to its source. The catalyst for all this chaos really began about a month ago, and it all comes down to one critical commodity: oil.
So here's the timeline. It all kicks off on February 28th of our 2026 scenario. A conflict erupts in Iran, and from that moment on, the market has been on an absolute roller coaster. Yeah, there was a brief pause for negotiations that gave a little glimmer of hope, but with new reports of more troops potentially heading to the region, well, that uncertainty is what's creating these massive economic shockwaves.
And the most immediate consequence: a huge surge in the price of U.S. benchmark crude oil. It has skyrocketed by 50% in just 1 month. A jump that dramatic, that fast, it's just guaranteed to cause problems everywhere.
Then on Friday, it hit a major psychological milestone. For the first time since the pandemic, a barrel of crude oil closed above $100. Now that's a number that gets everyone's attention, from central bankers all the way down to commuters just trying to fill up their cars.
You know, Mark Mullock from Siebert Financial just sums up this new reality perfectly. What he's saying is that oil isn't just one factor anymore, it is the primary force moving everything else. And why is that? Because it's a fundamental cost baked into almost everything we do, from making things to shipping them. So when oil spikes, it signals inflation and a potential economic slowdown, forcing everybody to rethink the value of everything else.
So this huge shock to oil prices has officially tipped the stock market into a much more serious phase.
This prolonged sell-off has pushed the major indexes into what Wall Street calls a correction. So what is that? It's pretty simple, actually. It's just a drop of 10% or more from a recent high. The Nasdaq was already there, and on Friday, the Dow officially joined it. It's a very clear signal that investor confidence has taken a serious nosedive.
And you can just see how the damage has been compounding. I mean, the tech-heavy Nasdaq is now down a staggering 11% just since the start of the year. This shows that it isn't just a bad week, it's the cumulative damage this whole period of uncertainty has inflicted on people's portfolios.
So, when the entire market is in turmoil like this, how do the big companies react? Well, we're seeing some pretty fascinating and very different strategies start to emerge.
It's like we're seeing two totally different paths being carved out of the chaos. On one side, you've got companies like Netflix playing defense. They're boosting immediate revenue by raising prices to protect their bottom line. But on the other side, you have strategists like Elon Musk who might be looking to play offense, using all this disruption to consolidate power for the long haul.
So if you're a Netflix subscriber, you're about to feel this directly. The company is hiking prices across the board. Its most popular plans, they're going up by $2 a month. It's a classic move to try and protect your profit margins when the economic future looks a little cloudy.
Meanwhile, in a completely different playbook, speculation is just running rampant that Elon Musk is using this market turmoil as cover to merge his two giants, Tesla and SpaceX. And what's the logic there? Well, a downturn can be the perfect time to make really bold moves, creating an industrial powerhouse that could be far more resilient to whatever market swings come next.
Okay, so this is the crucial point. None of this happens in a vacuum. A war in Iran, oil shocks, big corporate strategy shifts, it all trickles down, and eventually it impacts your daily life.
And here is the most direct connection: the gas pump. In just 1 month, the average price for a gallon of gas has jumped by a full $1. That's a real, tangible, immediate hit to the budget for millions and millions of people.
And it should come as no surprise that pain at the pump is having a major effect on how people feel about the economy. Consumer sentiment plunged 6% in March, hitting its lowest level since December. And when people feel poorer, they spend less, and that can slow the entire economy down.
You know, this kind of fear is contagious. It doesn't stay contained. It's spilling over from traditional markets into the world of digital assets. Bitcoin, which is often talked about as a hedge against this stuff, tumbled from over $69,000 to below $66,000. It's just a stark reminder that in a true panic, very few assets are really considered safe havens.
So what's the real takeaway here? Well, we are in a market where geopolitical headlines have a more immediate, more powerful impact than corporate earnings reports. The ripple effect is real, it's fast, and it connects all of us. Which leaves the one big question on everyone's mind. How long is this going to last?